Alrighty, hi everyone. I'm going to get started here, and um, and then hopefully, yeah. All right, sounds good. We can get started now. Okay. So good morning, everyone, and welcome to the Future of Online Capital Raising, hosted by Issuance and irlabs. My name is Corinne Tapsis, Investor Relations at irlabs. Alyssa Barry, Principal and Co-founder of irlabs, is also joining us today, as well as Darren Marble, Co-founder and CEO of Issuance. Please note that this session is being recorded and a replay will be made available. Today, irlabs and Issuance will discuss the future of online capital raising and how it's time for capital raising to enter the digital era and how that works. Darren Marble is co-founder and CEO of Issuance, a leading online capital raising platform for exempt market issuers in the US and Canada. Issuance has helped its clients raise more than $250 million to date. Previously, Darren was the founder and CEO of CrowdFundX, a financial marketing firm that pioneered direct-to-investor retail marketing using Reg A+ securities registration exemption. CrowdFundX marketed historic Reg A+ IPOs to NASDAQ, the New York Stock Exchange, and OTC markets. The company was acquired by Issuance in 2019. Darren's insights have been featured in the Wall Street Journal, the New York Times, Forbes, and the Los Angeles Business Journal, to name a few. We also have here Alyssa Barry. Alyssa is principal and co-founder at irlabs. She has spent over 15 years of investor relations, capital markets, and corporate communications experience. An activist by nature, she has raised over $1 billion capital, led some of Canada's most successful activism campaigns, managed M&A transactions, and enhanced board governance frameworks. Now, as a matter of housekeeping for today's call, if you'd like to ask a question, please type your question in the Q&A box. We will endeavor to address all questions. However, given our tight schedule, should we run out of time, we'll be sure to follow up with you offline. Our contact details are available on our website at irlabs.ca. Myself and the rest of our team members can also be found on LinkedIn, and we look forward to connecting with you all. So with that, I'll now pass it over to Alyssa Barry to kick us off.
Thanks so much, Corinne. Really appreciate it. And welcome, everyone. Thanks for joining us. I'm going to dive right into it with Darren, and we want to endeavor to keep this very conversational. And if you have any questions as we go through our comments and presentation today, please feel free to put them in the Q&A chat and we will address them. So Darren, I was looking up, doing some research, capital raised by companies through regulations, CF in the United States has increased tremendously since 2018. And in 2018, I saw that $7.23 million was raised, a small number, but probably pretty big for the new age of private capital raising from a crowdfunding perspective. That number increased to 28.5 million in December of 2020. And then since then, the industry has launched over 1.1 billion in using this exemption. I'm really excited to hear what you're going to walk us through today in terms of how we should look at raising money in the private markets. Without a doubt, everyone knows that the public equity markets, the taps are essentially turned off at the moment, and there's such a unique opportunity right now for companies to be using various exemptions and looking at crowdfunding platforms. So I'd love for you to take us through your journey and talk a little bit about what you're doing. And I'm going to throw some questions your way as we go.
Thanks so much, Alyssa. It's a pleasure to be here co-hosting this webinar with you. And thank you to the irlabs team and the Issuance teams for helping us market and drive over 150 RSVPs. I've been in the industry for, I guess, a long time relative to others. So we marketed what was the first Reg A+ financing ever in June 2015 for a small automotive startup called Elio Motors out of Phoenix, Arizona, and didn't even know what we were really getting into. And that campaign kind of put my company on the map. It put me on the map in a way. And since then, we've been really an industry leader and a big advocate for the industry in totality for the past several years. In total, we've helped clients raise $250 million. That's about 150 million of capital we've processed through the Issuance platform as a fintech, and another 100 million that my prior marketing agency, CrowdFundX, was responsible for driving into deals when we were in the agency business before we had a fintech platform. In addition to running Issuance as a co-founder and CEO, I also produce a series called Going Public, which is a fun, really fun project where we follow the stories of founders raising capital for their businesses, and the viewers can invest while they watch. And as a serial entrepreneur, I've raised $10 million for my own businesses. So I certainly am familiar with the challenges of the old model, kind of door-to-door, intro-to-intro, brokers, et cetera. And I'm really excited to be here with you. Maybe just taking a step back, I think it's important to talk about kind of what drives me and my team in this business. We are inspired to democratize private capital markets. And more than anything, what we believe is that customers deserve an opportunity to be owners in businesses pre-IPO. You've got hundreds of multi-billion-dollar businesses from Uber, Lyft, Peloton, DoorDash, the list goes on. These are businesses whose products and services we use in our everyday lives, but the customers are relegated to buying shares post-IPO. And by that point, most, if not all of the value's been wrung out, right? It's really hard to make a buck buying into a publicly traded company at a $30 billion valuation or even higher. So that's really what drives us. And maybe I'll start with the industry. So for those who are not familiar, because what I've learned is that, especially in Canadian capital markets, I've been to Vancouver, BC, meeting you and others 3 times in the last 2.5 months. It seems like these are actually, new ideas. And not that it's technically mainstream in the US, because equity crowdfunding today, 6 years into it, is not mainstream yet. If you look at these numbers, the industry's proud of them. We're not talking about a $100 billion industry yet, right? We're talking about a $5 billion industry for Reg A+. So how does that work? Reg A+, you can raise up to 75 million USD. You can generally solicit or market your investment, and anyone over the age of 18 globally can legally invest. This is available to US and Canadian-based companies that are private or publicly traded, and there's been $5 billion raised collectively. The requirements are substantial, however. So to do a Reg A, you need 2 years of audited financials, and you have to file a legal document called a Form 1A offering circular with the SEC. The SEC reviews, potentially comments, and ultimately qualifies the offering. It's usually a 4, 5, 6 month process to tee up a Reg A offering. So that would be the downside, right? In order to raise 75 million, where anyone on the planet can be your investor potentially, you have to go through a pretty rigorous process on the audit and legal side. Then you've got Reg CF, which I'll refer to as the smaller sister securities exemption. This capital raising tool has been available since 2016, so it went into effect about a year after Reg A+. Companies can raise up to $5 million USD. They can generally solicit. Anyone over the age of 18 globally can legally invest. However, to run a CF, the company must be domiciled in the United States. So unfortunately, CF is not available to a Canadian-based business. All that said, we're talking about $6 billion of capital that's been fueled into thousands of companies since 2015, 2016, and the industry is growing about 100% year over year. The reason this industry is growing, Alyssa, there's a couple key reasons I think I should mention. One, in these offerings, founders set terms. So that means that in a successful Reg A or Reg CF, founders are walking away from that campaign with greater ownership and control of their own business. So that's obviously an alternative to a founder going out trying to get a term sheet from a venture capital firm or family office or high net worth individual and having that investor tell the founder, well, here's what I'll do. I'm going to take 30% of your company and a board seat, and I want preferred shares and liquidation pref. Well, now you've got an alternative to giving up ownership and control. I should also mention these aren't mutually exclusive. So, we'll talk about companies that have institutional leads that actually have a lot of success in this industry where the crowd follows the institutional lead. But that's one big reason the industry is growing. And the other is it's incredibly powerful to turn customers into investors. And just to kind of let you know where Issuance fits, in our industry, the common way that companies are raising capital is through a marketplace platform. And my criticism of these platforms is they look like a Kickstarter campaign because that's what they are. They're a Kickstarter for equity. So you're effectively listing your deal alongside 100 other companies. You don't know these companies. These companies have nothing to do with you. You're commingling your brand that you've spent years and maybe millions of dollars to build with some third-party platform that's not well known. You're stuck in their template. Just like when you launch a Kickstarter campaign, put in your information here, put it in there. And that's not an ideal way to launch a campaign. Issuance has taken a different approach. We have a white label solution. So Issuance is a SaaS capital raising platform for Reg A+, soon Reg CF issuers. We're licensing this software, Alyssa, to our clients so they can run a self-hosted raise on their own domain or website. And just to show you what that looks like, it looks like this. This is one of our current clients, Aptera Motors. It's a solar electric car company based in San Diego, California. And the beauty of this model is that this is Aptera's landing page. This is Aptera's domain. This is Aptera's brand guide and style guide. They've designed this campaign page precisely how they wanted. And when given a choice, every company would prefer to do this because it just makes more sense. They're not stuck in a template. They've got incredible visibility into the analytics. And I'm proud to share that they've raised $55 million on the Issuance platform, largely because they're marketing their offer to an existing base of customers. So that's kind of one of the themes here, is that in order to be successful, you either have to be marketing your deal to a customer base, a fan base, follower base, or you've got to invest heavily in your marketing and investor relations campaign.
And Darren, using that as a case study, maybe touch a little bit on, I'm going to get into the technical. How long did it take for them to work through the rebrand? How long have they been out raising capital? And what are some of the initiatives that they're doing to draw attention to their capital raise?
That's a great question. I'll show you right here. I put up an analysis of this deal because it's really unique. We would define Aptera as a bullseye fit for equity crowdfunding. And what I often say in this industry is that these tools, Reg A+, Reg CF, they discriminate. They will favor a company and reward a company like Aptera and punish others. And we'll talk about those others in a minute here because that's equally important, right? Maybe you're not a good fit for this type of capital raise. You should know that before spending tens of thousands of dollars going down the path. So here's the high-level analysis for Aptera. 55 million raised, 14,000 investors over a 16-month campaign. They were marketing their shares primarily to an existing base of reservation holders. So before they engaged Issuance, before they made the decision to do a Reg A, they had spent years building a community by offering reservations for their vehicles, and they were charging fees, for those reservations so people can get a place in line. That's a perfect candidate to run an equity crowdfunding campaign. And by the way, this is very logical, yet you'd be surprised how many people don't understand this. If you don't have a brand, if you don't have brand equity, if you don't have a customer base, this is going to be a really hard way for your company to raise capital. And to be clear, there's no easy way to raise capital. This isn't necessarily any easier than raising from VC. It's just very logical for Aptera because they're turning their reservation holders and customers into investors. They're also incredible storytellers, Alyssa. If you were to talk to Sarah Hardwick, the chief marketing officer, you would hear right away in the first 30 seconds, they're selling their vision, their mission, their values. The story Aptera is telling is a powerful story. And if you look at their campaign page, it's less about we're going to IPO, you're going to make 10x your money. This is the opposite of your crypto kind of pitch, right? No knock there, but it's really about alignment of values. And then, of course, there's an opportunity to make money. So companies that focus on the message and the storytelling and they invest into the production of that story are having success. They've also had a lot of success doing price per share increases, going from $3.80 a share to $8.80 to $9.20 to $10.50. And so there's a big spike in investment in this deal every time they announce a closing. And then there's an entire marketing campaign that's executed and optimized during those weeks of closing to drive interest before they open the new round. And we've seen return on ad spend, or ROAS, as high as 30x in this deal, which maybe is an anomaly, but they're marketing their shares to their community. So it's just an incredible case study for what works in this industry.
Yeah, I really appreciate you walking us through that. And we've had the opportunity to work on a couple of private capital raises through various different platforms. And where we've seen the most success has actually been those companies that have a brand and have a community already, and being able to, it's almost twofold. You're augmenting your existing marketing and brand visibility, but you also get the opportunity to communicate that capital raise at the same time. And I think that's a really important way to think about this, is not just investment dollars into your capital raise, but also just general marketing spread across the board.
Yeah, that's precisely correct. So, the title, and maybe for a minute, we'll go into the kinds of companies that fail, right? Because for those of you who are learning about this for the first time, you've heard about it and you joined this webinar to understand whether your company is a good fit. Like I said, these tools do discriminate. So here's who fails. Companies that are pre-product and pre-revenue generally fail. Companies that have limited brand equity in the market generally fail. If you're going to spend $60,000 on your legal, $50K on your audit, and you're not willing to put $200,000 or more into your marketing campaign, you're taking the wrong approach. You're likely to fail. So the reason that firms like irlabs are here is because they play a pivotal role in driving awareness and ultimately dollars into deals. And they're part of the solution that every company who's going to invest in this process needs to be thinking about engaging to increase, your likelihood of success. Reg A is also available to publicly traded companies. We've seen issues with companies that have free trading shares at $1 and the Reg A shares are at $1.10, $1.20. There's no reason for that, no justification for it. Even if you say, well, my stock's not liquid, there's no volume, that's not a selling point for you, right? You're at a disadvantage if you have your equity crowdfunding shares higher than your free trading shares. We've seen it be an issue, and it is a process. You have to commit. It's not an outsourced engagement to Issuance and to irlabs. CEO needs to be dialed in and leading the initiative. So these are some of the things that, who fails, who wins. Companies with built-in customer bases, fan bases, followers win. And ultimately, Alyssa, my vision for this industry is that it's going to move to a self-serve model, right? So we're talking about the future of online capital raising. Well, what does that look like? I'll show you kind of what we've done here. Let me just pull this up. Maybe I can just talk through it. I think that the future of online capital raising is going to work like Shopify or Slack, where a company can go to issuance.com. They can get educated about Reg A, Reg CF, how these things work. Are they eligible? What are the requirements? And then they need to be able to self-serve. What does that mean? It means a company needs to be able to launch one of these campaigns, ultimately, without speaking to someone. Now, I know that sounds intimidating, and some people may say, well, that's impossible. These are securities. But that's actually where the industry's headed. When you create a Shopify e-commerce site for your t-shirt company, you're not talking to a sales rep at Shopify. You're able to go to shopify.com, pick your package, plug it in. Maybe you have a tech person help you, but you can get up and running pretty darn quick. And of course, you got to make the t-shirts and have inventory and figure out suppliers. The same would be said of these campaigns. Yes, you need 2 years of audited financials. You're going to have to file a Form 1A offering circular. That's part of the process. But when you're ready to launch, you should be able to do it instantaneously, without friction. And by the way, with no retainers, no fees. This is a big selling point for Issuance, so I do want to mention it. This is kind of how I see the industry. A lot of these platforms, our competitors, they're charging fees that you would associate with a broker-dealer, and yet they're not placing capital. That's my criticism. I think it's a very fair criticism. Imagine someone on this call, you've got, I don't know, you're doing 10 million in revenue. You've got 15,000 customers. You've already paid to acquire those customers. Why would you pay a platform 8% of the money you're raising from your own customers? Why would you do that? Doesn't make sense. If you're going to spend $250,000 with Alyssa and irlabs. Maybe you spend $500,000 to run a world-class marketing and IR campaign. Why would you pay someone 8%? Doesn't make sense. So Issuance sees the gap, and we've priced our platform at a fraction of the cost of all of our competitors. It's just 2 to 3%. And by the way, it's pay as you go. It took me a while to get here mentally. We used to charge retainers. We don't anymore. So this is part of the move to self-serve. This means that a company should be able to launch a campaign with no money out of pocket, pay as you go. The fee should only be incurred on the back end of the raise. No monthly fee, no fee per subscription, no fee per investor, no fee per payment processed, no $1 million invoices. Some of our competitors are sending $1 million invoices in these campaigns. They're not raising capital. That doesn't make sense. That practice needs to stop, and Issuance is going to lead the way. And then I think the biggest selling point is we're the only platform that allows the retail investor to check out for securities using Google Pay and Apple Pay. This is another how do we get to the future. The investing process for the retail investor has to be totally simple. Yeah, I'm just going to pull this up here. I don't need to play this video. Right there. This is unique. This is how you buy products online today. You're not typing in your credit card information. You're not typing in your routing information or banking information when you process a wire. This is how you buy. This is how you should buy securities. So our vision for the future of online capital raising is a one-click checkout for securities. And we're going to get as close to that reality, Alyssa, as we can. This system is fully compliant with SEC rules and regulations. It has KYC, AML, fully integrated, automated. Of course, it's invisible. The investor doesn't even know they're being KYC'd, AML'd, but they are. And when they check out, 2 clicks on an iPhone or Android device, and you are done. No other platform has this capability. So these are some of the ways that we and others are moving towards the future of the industry. It has to be a simple investing experience for the investor. It has to be self-serve onboarding. And then you need to partner with the right marketing firms to drive your awareness campaign. So the technology is actually processing investments, right? Because there's no free internet money, as they say.
So Darren, a couple of questions for you. And there's a few that have come in as well that I want to throw in here. One, can you touch on what's the due diligence process for a company that wants to work with Issuance? What does that look like?
That's a great question. So we have a sales team, and we will talk to any company that's interested in working with us. We want to understand if they're eligible to run a Reg A or Reg CF. So where are they based? Are they eligible? Have they filed the offering circular? Do they have audited financials? You can't be a bad actor and run a campaign. Now, there was a moment in time, Alyssa, where Issuance was selective. And there are companies that take this approach. I think it makes sense for some businesses that operate like an investment bank, and they want to be extremely selective and kind of reject anyone that they don't think is going to be successful. I'm at a point now in this industry where I'm maybe leaning the other way, which is we're just a fintech company. We're a processor. If a company wants to raise capital and they're eligible and able, we want them to use our software. We don't take responsibility for the outcome. We don't take responsibility for the marketing. We're a processor of deals. And that's a strategy for me to grow my business, and something we've really thought more about. So you've got to be eligible. You've got to be serious about filing the offering circular. There can't be any bad actors. And of course, in some deals, we are taking stock. We're interested in companies that have an intent to go public and provide liquidity to the retail investors in their offering.
That's really helpful. A question that's come through here, Darren. So for Reg CF, you mentioned that the business needs to be domiciled in the US. Can it have subsidiary offices in Canada? And maybe on the back end of that, just talk a little bit about, I can see from the very broad participant list, we've got people from all over the world listening in. So how are you able to serve us globally?
So the way it works is simple. The entity that's raising capital for Reg A needs to be domiciled in the US or Canada. That means you could be a UK-based business, but you have a wholly owned subsidiary or a sister company, for instance, in the US, and that US entity could be a startup. You might have formed it yesterday. That entity is the one raising capital. So that's maybe one workaround. Same thing for Reg CF. You could be an entity, outside the US, and you have a US sub, and that sub runs the Reg CF. Outside of that, the investors can be global. So we've had offerings where a company raised $30 million and 3,000 out of 10,000 investors were from outside of the United States. So it's a global opportunity to raise capital. And again, that's why this exemption favors companies with the customer base, fan base, followers, wherever those people are. Most of them are likely over 18 and are therefore eligible to invest. So that's why we see more and more companies like Aptera or Wink, or companies that have 10,000, 50,000, 100,000 customers they've worked hard to acquire, tee up these deals because they are going to be successful. It's a question of how successful will they be.
Thank you for clarifying that. Can you also talk a little bit about the automation of the KYC AML process that you referenced?
Yep. So Issuance has partnered with a company called Trulio, and they provide a system that performs KYC AML on the investor in real time. The beauty of this integration is that the investor doesn't have to provide an ID. There's no front and back of your license, which a lot of our competitors have, unless you're flagged. So if you're flagged in the system, then the system will prompt you to provide more information. But we've designed this so that it's compliant with SEC rules and regs. All the proper checks on each investor are happening, but they need to happen in as few steps as possible, right? Because the more steps, the more screens, the more clicks, the higher drop off you're going to have. That's why the technology is incredibly important. The user interface matters. The user experience matters even more. And this industry, think about it. We're doing $6 billion in funding. Most of these people, by the way, Alyssa, are investing through credit card on their phone, and they're having to type out a credit card number. When's the last time you had to type out a credit card number? That's an old way of buying something online. So the industry is, as we're trying to quickly as possible, drive it to where it should be, which is automated, intuitive. Commonly asked questions are pre-populated based on the most common responses, and giving the ability for investors to buy using Apple Pay, Google Pay. These are things that make it more mainstream and are going to drive industry growth. Thanks,
Darren. Question here about 506C deals instead of 506B deals. How does that fit in with Issuance, and can we market and advertise those similar to Reg CF?
The answer is yes. So Reg D 506C was also part of the Jobs Act. That's the other exemption that I didn't mention. This allows you to generally solicit or market the deal. It's a private placement that can be marketed, but the catch is that the investors have to evidence their accreditation. So you're limited to accredited investors who have to provide proof that they're accredited. They can do that through a CPA letter, uploading tax returns. Issuance is in fact launching a Reg D 506C product next week. So we've been beta testing it for the past month, and we'll have a CF platform in January. So that will make us full stack. So 506C, there's no non-accredited retail. You're limited to accredited, and the extra hurdle is that the investors have to evidence their accreditation, versus a 506B, which is your traditional private placement where the investor just checks a box, which is self-certifying. So there's one extra step that has to be performed in the 506C deals.
Okay, excellent. I know some of these are technical, so if anyone has any follow-ups for Darren offline, we're happy to do that as well. Just a reminder, if anyone has questions, you can send them through the Q&A chat.
Actually, Alyssa, I've got a question for you, because we're this is about tech and marketing and how they work together. Can you talk a little bit about the irlabs strategy when you are creating an awareness campaign with an objective of raising capital? What's the highest level strategy that you're employing? And then specifically, can you talk about PR and institutional investors, because this is something that's actually unique to IR Labs that we just haven't seen in this industry. This idea of brokering meetings between founders and institutional investors, things that happen quite commonly in a traditional IR or investor relations campaign for a publicly traded company that for one reason or another never happened here. I think it's an incredible value add and would love to hear more about it.
Thanks very much, Darren. We're really excited. We see such an opportunity the same way you do in this space, and have had the opportunity to work on a number of campaigns from a marketing perspective over the last year. And I have a real love or sweet spot for the private capital raising world. One of the things that we do when we're looking at working with any company, we're doing our due diligence the same way that you referenced about a company needing to make sure that they have the time to commit and the dollars to commit to being successful in their raise. I started my career in public relations, and I'm sure everyone has subscribed over the years to all of these real fantastic newsletters and various publications that they get inundated with. A lot of those are pay to play, and not all of them are. Some of them are excellent, and some I think are going to be phased out over time, and we've seen a lot of turnover. I am a huge fan of earned media. How fantastic is it for a company to be on the front page of one of the major newspapers across the world, to show up on some of the really prolific news platforms, to get a Forbes shout out, Bloomberg, Globe and Mail here in Canada. And so one of the things we like to do with our companies when we're developing their marketing strategies is to make sure that we're incorporating the public relations and the earned media side. There is some nice pay to play to do, but we love nothing more than being able to actually earn that coverage. So that's something that we roll into our strategies. The other important piece also is investing in some of the digital marketing dollars, and we work with a couple of different firms to ensure success on that side. Some of the campaigns that we've worked on over the last year, especially when you're tapping into a network that's already pre-existing, to your point, a lot of companies already have their fan bases and existing clients. There's a bit of there can be an apprehension about who is communicating with that group. And one of the things we found really successful with any online capital raising has been actually having a human, and in our case, someone on our side or one of the partners that we work with, that's brought in to have a follow-up call to answer the questions that we're allowed to answer under the regulatory framework that exists for all of us in the work that we're doing. And there are questions we're not allowed to respond to from a exempt market dealer perspective. I won't get into that here, but if anyone wants to discuss that offline, we're happy to. We worked on a really great real estate deal last year where there were quite a few people that were stuck in the process. They had started filling out some of their paperwork, and again, I love how you've automated everything. But it's getting stuck in the system and actually having someone being available to answer questions. The world of investing is exciting, but sometimes there's information within the pitch decks and the offering materials that people just need clarity on. So actually having a human to have a conversation with is where we can come in and sort of augment the process. And the investor side of it, the analogy I like to use is actually comparing the private capital raising world to the public markets. So we've got clients on both sides. About 50% of our clients are public and the other half are private. If you're a public company and you're on the NASDAQ and you list your ticker is there, but you don't put out a press release, you don't tell anyone that you exist, you're not pounding the pavement and employing initiatives to raise awareness, no one knows you're there. And it's the same thing in the private capital raising world as well, where we need to make sure that we're creating visibility and drawing traffic to the campaign, and having that ongoing communication. I often say to companies, make sure that you've got all of your really great news announcements and news flow that will be rolling out throughout your campaign, and creating a little bit of that excitement and FOMO. Obviously, we're sticking to the facts and sharing what are hopefully really exciting milestones and successes for the company along the way. But telling that story is so critical. You can tell that I love this stuff. So I'll pause there for a second, but thanks for asking the question.
Nope, that's fantastic. I mean, these are all the reasons why we're thrilled to be working with you and your team.
Thanks, Darren. I'm going to jump back to some questions and maybe a nice segue based on my commentary about how can a public company benefit from your platform, and maybe talk a little bit about that process.
I think there's more and more companies now that are publicly traded on the TSX, CSE, over the counter in the US. Maybe they're dual listed, that are beginning to utilize Reg A specifically as a capital raising tool. A lot of these companies have, not a lot of liquidity. They have a lower price per share, and they are looking for an unfair way to market their stock. And Reg A permits general solicitation, and it permits retail investors, gives retail investors the ability to invest. So, imagine you've got a $1 stock, you've got 10,000 paying customers, but you don't have, the investors, your customers are having a hard time buying your dollar shares because there's not a lot of volume. Maybe they need a special brokerage account, which they don't have. But if you allow those 10,000 customers to easily invest in under a minute using Reg A Plus, would they? A lot of them would, if given the opportunity. So that's, I think, one of the reasons why some publicly traded companies are beginning to utilize Reg A. They're pricing their Reg A shares at some discount to the free trading shares. So the company that's got a $1 share, the Reg A shares are at 80 cents, 90 cents. And by the way, you can increase or decrease the price per share in these offerings in real time by up to 20%. You could be at 80 cents today and 75 cents tomorrow and 85 cents the next day. You can do that in real time with no pain. You file a supplement and you're done. If you increase or decrease the price per share by greater than 20%, at that point, you do have to file an amendment. You do need to stop fundraising. You do need to wait for the SEC to requalify that offering. But there's flexibility baked into the pricing, and there's a lever that a company that has free trading shares that have some volatility and price fluctuation be able to move with the market and use those levers to adjust, decreasing their price per share in the Reg A offering in real time, so that those Reg A shares are always at some discount to the free trading shares. So that would be the answer.
Okay. Thank you for that, Darren. There's some questions about how to drive accredited investors to the platform, and comments about buying lists. The old way of cold calling is dead, and I could not agree more. I don't pick up my cell phone for anyone who isn't already in my contacts. Maybe I'll touch on this very briefly, and then Darren, I'll pass it over to you because I know you have a lot of experience in this area as well. So I'll just reiterate again the importance of making sure that you have an existing community of followers in terms of your brand and products or services that you're offering. In addition, we've worked on some digital marketing campaigns where we have the ability within the framework and the rules that we have to follow from a regulatory perspective of putting out or driving awareness about the campaign using digital marketing strategies. So essentially working out who are we actually targeting at the end of the day. So if it's I'm using real estate because it's on my mind. I've got a few of those going right now. Making sure that you're targeting someone within the demographic and who has the interest in what you might be proposing as part of your campaign or your investment offering. Our digital marketing partners are absolutely amazing in making sure that we're spending ad dollars in a really great way to make sure that that information is getting in front of people. We're all on websites, we're all on social media, and whether you know it or not, these capital raises or various ads are in front of us almost every minute of our online world. And so there's some strategies to employ from that perspective. One of the things, and I think you were kind of teeing this up for me, Darren, one of the things that we've been able to be really successful at as well is, and which makes, I think, what we do at irlabs very unique. We've spent our careers in the capital markets and building relationships with institutional investors, family offices, investment advisors, the big pension funds. We really take a lot of pride in our Rolodexes. At the end of the day, where there's a bit of a gap and an extreme opportunity is being very strategic in trying to draw those bigger check sizes. So we know that we have the opportunity to have lower minimums and leverage the wonderful beauties of the crowdfunding way of capital raising and having smaller raises to essentially allow everyone the opportunity to invest. A lot of companies come to us and want to have those larger check sizes for very obvious reasons, and it makes these capital raises a lot more successful. We work with our clients to look at the various funds that might be of interest, the family offices that we have in our networks that might have interest. It's a lot of research and a lot of diligence to make sure that we put our best foot forward in having those conversations, because we have really great relationships with EMDs that allow us to understand what we can and cannot say. We're able to approach a lot of these family offices and accredited investors, high net worth, and share these opportunities with them as well. And we have a couple of case studies of success on that. And we did that throughout this past summer when the equity markets, the public markets were essentially turned off, and we're able to share some of the private capital raises that we're representing from a marketing perspective with that community. So it's a lot of hustle and a lot of relationship building, and there really needs to be a strong buy-in from the management team to have those conversations, be available when that CIO of that family office wants to have that meeting. So I think there's a real opportunity to complement what you're doing, Darren, and bringing in the more sort of institutional, high net worth accredited investors and transitioning them over to the platform.
Yeah, look, I want to put a point in it because it's a tremendous value add and it's literally non-existent in this industry. This industry historically has been about small, self-directed retail investors, ease of use investing $1,000, $2,000 online through credit card. And what Alyssa and irlabs are bringing to the table is a more traditional type of approach that every company that runs a Reg CF or Reg A plus should be wanting and trying to sign up with that firm today. And I mean that straight up. You're looking to increase your odds of success. Run the retail campaign and run the institutional campaign. You want both. Maybe you raise 5 million from retail and 2 or 5 or 10 million from institutional. That's a tremendous win. The only other time I saw this approach, Alyssa, ever taken was in the early days, which I guess were 2017, 2018. We used to work with a handful of boutique investment banks in New York in some of the first Reg A plus IPOs, where our firm was brought in to do the retail marketing, and the investment bank who was doing the underwritings on a best efforts basis would go out to their book. So we'd have companies raise 10, 15, $20 million with some mix of capital coming online and some offline. And that's a really savvy way for companies to think about running these campaigns. And you've got kind of a dual approach. I think it's brilliant. I think it's timely. And I think it's going to be hugely popular for companies in this industry.
Thank you very much for that, Darren. I'm going to ask one last question here that's come in, and there may be a few that we'll have to follow up offline on. And then I just want you to leave us with your closing thoughts. So someone's asked here, Darren, we're a Canadian private company about to launch a CF round for our Canadian fans. We want to launch a Reg A plus raise in 2023. We understand SEC allows up to 30% of existing shareholders to sell their shares into the Reg A plus. In your experience, do you see Canadian issuers using this as a strategy for early liquidity for some investors?
Absolutely. Absolutely. It's part of the feature of Reg A. So what that question is asking is if there's a $10 million Reg A raise, the founders, existing shareholders, have the ability to sell into the offering up to 30%. So that means if $10 million were funded, $3 million goes to insiders. And, you know, it's in some ways a different approach than your typical investment bank would take, right? They're taking a company public and the founder raises their hand and says, hey, can I get some money? I've been grinding for a decade. An investment bank says, oh no, if you're a selling shareholder, our clients aren't going to want to buy your shares. That's a red flag to them. I think that's BS. I think founders should take money off the table when given the opportunity. How long have you been building your business? How much blood, sweat, and tears have you put into your company? How about that time you were, sleepless and anxious for 6 months because you signed a personal guarantee on a line of credit with the bank? There's pain and suffering we endure as founders. We deserve reward. And so I think the selling shareholder function is an important function in these deals. I don't think founders should be nervous about doing it. And truthfully, retail investors are way less sensitive. You're really not likely to find a retail investor that says, wait a minute, Alyssa's taking money off the table. 30 cents of every dollar is going to Alyssa. Well, yeah, Alyssa's been building her business for a decade. She put her blood, sweat, and tears, her life savings into this thing. So that is a feature of Reg A. It is used, and I think it should be considered if it's relevant or meaningful for you and your deal.
Thanks, Darren. Maybe let everyone know where we're going to be over the next couple of days. I'm here in Vancouver. You're also on the West Coast in California, but we're going to be in the same spot this week, and happy to meet in person with anyone who will be in our area. And then, of course, for all of our listeners here today, we're happy to connect offline and answer any outstanding questions.
Thanks, Alyssa. So there's an event happening tomorrow, Wednesday through Friday in downtown Los Angeles called Equity Crowdfunding Week. Issuance is a proud sponsor. I'm moderating and being a panelist on several panels. It's really the largest equity crowdfunding event of the year, and it's drawing people from all over the country, actually internationally as well. So find us at the Issuance booth. Come say hi to me. Come say hi to Alyssa. We'll be there. I'm also working to be more present, Alyssa, in your neck of the woods. I've been to Vancouver, BC 3 times. I'm going to Toronto. I'm going to get Canadian citizenship, not to leave the US, but because I love Canada too. I've really become just fascinated with the company, the people, even the weather I like. I know that sounds crazy to all the Canadians, but I think there's a need for us to educate all kinds of bring in new constituents into this industry. People are still learning. It's not mainstream. And yet companies are raising tens of millions of dollars using Reg A+, using Reg CF. They're setting their own terms. They're retaining greater ownership and control of their businesses. They're turning customers into investors. Therefore, brand ambassadors that will have the highest lifetime value and lowest churn rate of any cohort in your company. This industry needs to be mainstream. We have a vision to get it there. And if you are in Los Angeles this week, come by, say hi to Alyssa and I. We'd love to meet in person. And Alyssa, thank you so much for the opportunity to co-host this webinar with you. It's been a pleasure, and hope to see all of you in LA.
Thanks again, Darren. And thank you to all of our guests who joined us here today. We will send a follow-up communication that has a recording of today's event. Darren and I were both on LinkedIn. You can visit our website at irlabs.ca, and our contact details are there. You can feel free to reach out, and happy to connect you with Darren directly, or talk a little bit about what we're doing at IR Labs. Thanks, Darren.
Thanks,
Have
Alyssa.
a great day,
Thanks,
everyone.
everyone.
Bye.